Good evening, traders. Today's date is June 1st, 2017. Start of a new month. I'm excited because May was not so good for me. I think May is the worst trading month this year for myself. I had a bunch of losses lately. You guys know about a few of them, pound yen, and the one I'm looking at now is Aussie dollar. I posted a video on why I was long, but that did not play out the way I wanted it to. I closed the position and I lost about $1,800 or so. So no one likes to lose that kind of money. It may not be a lot to some of you, may be a bunch to some of you guys. It just depends on what your account size is and what you are willing to lose on any position that you take. You know, part of trading is losing. If you've never lost a trade in your life, you must be a great trader, but every great trader out there takes losses. As long as you know how to manage your losses and not blow your account, that's the name of the game, to stay in the game and not blow your account. And speaking of that, I kind of want to talk a little bit about that. But before I jump in, an update on Aussie dollar. I was looking at the downtrending line here as support, and I was expecting price. I was hoping price would go up and test this little zone up here at 0.754, 0.755, and obviously that did not happen. And yes, I do see this trend line here that was clearly broken. Bounce, 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 broke the trend line, retested the trend line from beneath, and collapse. But I was looking at this trend line for my trade. I like that it tested the trend line here, rallied up, double top, pulled back, retested the trend line. So I held on here. I figured, hey, maybe it just wants to retest the trend line. I was excited when I saw this big engulfing candle on the, I'm looking at the 4-hour time frame, by the way. And long story short, this, price just collapsed to the downside. So I took a loss. Pissed me off, of course, but like I said, losing is part of trading. Just manage your losses so you don't blow your account. To me, in my opinion, this looks like it wants to retest or test this bottom area here at 0.734, but I am not trading Aussie dollar anymore. Now, just to talk about losses and how to manage your risk, if you go to Google, and this is a free tool that all of you guys out there could use, search position size calculator on Google, and the first result that you should get is from my FX book. So go ahead and click on that, and you'll close that. You'll get this page here. Great tool to use. I myself use this a lot. I don't always use it, but I do use it a lot. So let's say you're working with a $10,000 account, and you should only risk about 1 to 2 to 4%. You guys have all heard the 2% rule. That's completely up to you, completely up to your style. 2% is kind of the standard. I'm sure you guys, if you're into Forex, you've heard about the 2% rule. You could Google it, do YouTube. I'm sure there's some good videos out there on that. But let's say you're willing to risk 2% on your $10,000 account. And let's say you are willing to risk your stop 50 pips on Euro USD. You could click the menu here and you'll see that whatever pair you're trading, it's probably in here. So let's say you're trading the euro dollar, Euro USD, and you have a $10,000 account. You're willing to risk 2% of that $10,000. So your max loss would be $200, because 2% of $10,000 is $200. So this is, the calculator is giving us a result, and it's saying that you should be buying or selling depending on what you're doing, shorting or going long. Your position should be at 0.4. So let's say you have a $100,000 account and you're willing to risk 2%, and your pip stop loss is at 50. So 2% of 100,000 is $2,000. So let's say your max loss, you're willing to lose $2,000. You could buy 4 lots on EURUSD or sell 4, depending on what you're doing. So take a look at this website here. I'm not getting paid to do this. It's just a good free tool out there that you could use on my FX book. Just Google position size calculator, just like I did, and you could use this to determine what your positioning should be based off of your account. So even if you have a $2,000 account and you're willing to risk 2%, 2% on 2,000 is $40. So every trade you're willing to lose $40, depending on your pips. So let's say you're willing to risk 75 pips. It's still $40, but your lot size is dropping. All right. So let's say you're willing to risk 10 pips. Your lot size just went up. Okay. So play around with it. See what you guys think. Let me know. So going back to the charts now. Aussie dollar. Don't like it anymore. I'm staying away from it. I'm starting a new month. Hopefully we could have a profitable month. So the first trade for the month for myself is New Zealand dollar. All right. NZDUSD is the currency symbol. Now I want to break this down, and I want to take my time. So this might take a little bit longer than 5 minutes, so bear with me here. I'm going to try and speak slow to explain what I am looking at and why I think New Zealand should rally a little bit from its current price. Now, I like to look at things from a bigger perspective down to a smaller perspective, and all I mean by that is I like to look at larger time frames and work my way down. Okay, so I'm looking at a weekly time frame. This is monthly. Okay, you can zoom out all the way and you could clearly see price action on a monthly time frame. All right, but I want to go ahead and use weekly just to kind of break it down a little bit more. First thing I see on the weekly time frame is this very nice trend line here. Okay. It's right about there. So I am connecting the weekly candle of August of 2015 here. The date is down here, so keep your eye down here as I hover over the candle. August 24th, 2015 is the week that I'm starting on, and I'm connecting that trend line to the week 2016, January 18th here. When you connect the low to this low and project it out, you'll see that this candle here on May 8th, 2017, the week of May, is where price tested that trend line. So it's not drawn exactly right, but I'll go ahead and move it up just a tiny bit. That's good enough. Okay. So what I'm seeing is the third bounce of this trend line on a larger time frame. Larger time frames are stronger. So when you look at a larger time frame and you find a pattern that you like, most likely that's going to be a very strong pattern for you. The higher the time frame is, the stronger the pattern will be. So I'm going to go ahead and highlight, if you don't see it already, just to explain this to you guys. Bounce number 1. Oh gosh, I'm sorry. Let me start over. Bounce number 1. Bounce number 2. And bounce number 3. In my experience, bounce number 3 is the strongest bounce. That's just from what I've kind of seen over the years of trading. So I'm looking at bounce 1, 2, 3. 3 should be the strong move up. All right. Here's something pretty cool that I like to use also when projecting price targets or direction of currency, if I measure from the low here to the high, you can do it by clicking hold the shift button, click, and as I go up, this thing tells you how many pips. It's a measuring tool. So from the low to the high here, price rallied about 700 pips, 695, 699. We'll call it 700. 700 pips from bounce number 1. Now let's measure bounce number 2 from the low here to the next swing high before pulling back was about, look at that, another 700 pips. Okay, so what am I expecting from bounce number 3? You guessed it, 700 pips is what I'm expecting. 700 takes us right about here, and if you look left, what do you see? You see this nice wick here on the week of September 5th, 2016. All right, so I'm going to go ahead and project that line. I'll draw a horizontal line here for you guys to see, and just as a visual, I'll go ahead and do this one more time. So I picked the low to the high, meaning this high, draw a vertical line, use that line to measure the low to the high, pull back, and now one more time from bounce number 3, from the low, right about there. Look at that, that takes us right up to that. Now this doesn't mean just go out and find something like this and start measuring. There's a lot more to it than just one reason. All right, so I've got bounces, I've got engulfing candles, and I'm looking at price action. I'm looking at a lot more than just that. That's just one simple tool that I'd like to use. Now, speaking of engulfing candles, last week's candle closed at 0.7626. All right, that being higher than the red bar high made here on April 24, 2017. The high of this weekly candle is marking 0.7472. Now, last week we closed above the red bar high. Now, what I mean by red bar high, turn on my snap here. So let's make this black, just so you guys could see there. The red bar high, we closed above the red bar high. So that is a failed bearish pattern. This is an inside bar bearish pattern. Price closed above the red bar high, making that bearish pattern a failed pattern. But keep in mind, it did test the downtrending line. So you've got a bearish pattern coming into a very strong overall pattern. So that's a good sign. Now, I do want to throw out there that should price ever close below this trend line, then expect New Zealand to make new lows. Okay, so I'm looking at this as a bullish move on here on New Zealand, which is why I am long already. So let's keep breaking this down on smaller time frames, okay? So let's look at the daily chart now. On the daily time frame, you'll see that 3 days ago, here on May 30th, 2017, we had a really nice engulfing candle. What do I mean by engulfing? That means that price closed above the previous high. All right, so this bar engulfed this candle. We had a 1, 2, 3 day move to the downside on day number 3. Keep that in mind. On day number 3, this thing is looking green. There's still a whole bunch more time for the daily candle to close, but keep this candle in mind. I like this pattern. Anytime I see an engulfing pattern followed by 1, 2, 3 and an engulfing pattern, I like the pattern. To me, that signals a bullish move on the pair. So keep that number 3 in mind. I've said it a few times. 1, 2, 3, 1, 2, 3. All right. Now let's look left. What do we see? We see that for a long time, price failed to break this level here at 0.70, we'll call it 0.75, 0.705, all right? So for a long time, this was the ceiling, all right? So this is a daily. Let's look at it on the 4-hour time frame just to get a better view. Okay, so price failed to break this level here for quite some time. We had a nice bullish engulfing candle, tested that level here. We pulled back, tested that level again. A lot of wicks here, a lot of rejection, a lot of sellers here. Pulled back, tested one more time, failed, made a low here. But if you look left, it found support here. And what happened since? It tested again that same level and failed again. So here from, I'd say March 15th through April 23rd, so a little over a month, it failed to break this little level here. All right, so now if I fast forward, if I look here, price tried to test it again here, failed, tried again here and failed. And what happened here? We finally closed above it, and price has managed to stay above that line. So that is a good sign. As I say in my videos, previous resistance becomes support. The ceiling is now the floor. All right. Another thing I'm looking at on New Zealand on a shorter or smaller time frame, excuse me. Let's switch it down to the 2-hour time frame. On the 2-hour time frame, I see this clear channel here on New Zealand that price is staying within this range here. Okay, so I actually shorted it here, and it was a small scalp. I really should have held, but like I said, so here's that horizontal line, here's that channel that we were inside. So I'm expecting price to make a move up here, make a higher high than this high. Now remember, this is a shorter time frame, so I'm breaking it down from large, from top down. Okay, so price should test this level here in maybe next week's session. Keep in mind, we do have a Fed announcement or a non-farm payroll announcement tomorrow at 5:30. Check your local time. There will be a lot of volatility here on just across the board, not just this pair, just across the board. So watch your stops, check your spreads and all that, and be careful out there. So what do we see on the 2-hour time frame? 2-hour time frame, we see that we've just had a bullish engulfing candle. So that's nice. This is overnight trading. This is just nothing. Price has gone sideways, so I'm not going to make too much of that. 4-hour time frame, we have an engulfing candle here. This candle just closed about 30 minutes ago. You can see here this candle has now 3.5 hours left for this candle to close. So who knows, overnight we may pull back or maybe keep going up. But remember, 5:30 a.m. It is 10:28 p.m. where I'm at. So I will be up early tomorrow watching the NFP announcement. If price loses this level, I would expect this to go down. But anytime you have these announcements, there's a lot of volatility. So we could see a quick pullback and then shoot up, or this will just shoot up. We don't know. So don't try to predict that just by guessing. All right, so this is what I'm looking at. I'm looking at previous resistance becomes support. This should be support, along with price being inside of this channel. 3 bounces on the trend line on a larger time frame, 1, 2, 3, and this is my target up here. If we do break this level, just look left. Look left. What do you see? You'll see that. Go ahead and mark it there. Previous support. I'll zoom in. Previous support. Bounce, 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 bounce. It broke that previous floor. became resistance. Okay, so zoom out, now look right. That's where I would expect price to test should it break this. Okay, there's all kinds of trend lines you could draw on this, but hopefully that explained it pretty well for you guys. If you have any questions, let me know. So I just broke it down from larger time frame down to a smaller time frame. I am long this pair. Small position for me. I'm trying to get back into this. I took a big hit on Australian dollar. Took a big position on it, bigger than what I usually would take. That ended up being a loser for me. So hopefully the month of June is a strong month for myself and all of you out there. If you liked the video, let me know if you liked it. If you don't like it, let me know. Comment. Feel free to comment on it. And if any of you guys are interested in going over a few pairs with me, if you have any questions, if you have any pairs you want me to take a look at, I'll be more than happy to do that. I do follow a bunch of currency pairs here. I follow gold. I follow the SPY, follow oil, all that. Let me know if you guys have any charts you want me to look at. I'll give you my opinion on it for whatever it's worth if you're interested in it. And we'll go from there. All right. So hit the like button, subscribe if you haven't. And thank you guys for watching the long video.